everybody. Good evening. My name is Julie Tallman. Welcome to tonight's discussion on the secret to liquidity for passive real estate investors. This is a hugely important movement for us. We're 2 years in on development on this. We just rolled out the technology to solve the problem of liquidity that passive investors really have always needed. And we're going to go through that, give you a great presentation tonight, but just a couple of housekeeping items. First, we are recording this conversation and an email will be sent out for replays, so you'll get that. Please feel free to share that link with anybody that you feel needs this liquidity or needs to hear and be part of this discussion. At the bottom of your screen, there is a chat feature. You can go ahead and pop in and say hello, tell us where you're from, who you are. And then even almost more importantly, there's a QA, the bottom right in the middle of the screen. And that's where you're going to want to post any questions that you have at all. We will make time to answer as many of your questions as we can at the end. We'll have kind of a Q&A section with this webinar. And pretty soon I'll be handing the reins over to Christian here as he'll lead the discussion through most of the webinar, and he'll introduce you to the team. But it is my pleasure to introduce Christian and also our guest for today's conversation. Christian Sadler is our VP of Investor Relations. He is the PREIshare Fundication Show host. And it's really important to note that he has over 20 years experience in real estate. He is a self-proclaimed real estate geek, loves real estate and all things real estate. He knows his stuff. He's worked in residential and commercial. He's flipped, and he knows so much about this syndicated and passive real estate market. So he's such a great mouthpiece for our company. And he will take the reins here pretty shortly and walk through our message tonight. And then I want to introduce our very special guest, Arthur Bavelas. He is the founder of Family Office Insights, and he actually also sits on the board for PREIshare. Reason being, he's got about 5,000 members. Obviously, a lot of family offices like to invest in real estate, but can be a little hesitant of the hold time. And so having that liquidity for his family offices is just such a great option. And he's helping us kind of roll this movement out as well. So Christian, I think you have Mike and Kent in your presentation, right? Are you introducing them or do I need to introduce them?
I will, but you're happy to give them some additional kudos because I'm really grateful that they're on the line with us today.
All right, perfect. Yep, we have Michael Anderson. He is our CEO and founder of PREIshare. He's been in real estate for over 45 years. He's just a founding force in understanding what sponsors need, what passive real estate investment is all about, and he's contributed it to over $6 billion in real estate transactions. So, not too shabby. And then Kent Anderson, after a long, successful career of over 20 years in institutional investment, Michael Anderson convinced him to come over to the real estate side. And he has very successfully managed billions of dollars in this realm as well. So he's our chief investment officer and he's our fund manager. So nice to have all three of you gentlemen on tonight. And Christian, I think we're ready for you to take the lead and start the presentation.
All right, I'm going to jump right into it here. Just want to make sure that you guys are able to see my slideshow.
Got it.
We're good. All right. So thanks, everybody, and really grateful to be on the line today, especially with the fine gentlemen that are here, as well as Julie. I feel like I'm standing on the shoulders of giants when I am able to get in the room with these guys, even if it's a virtual room like this one today. So I'm going to jump into the information. I'm going to go fairly quickly through all of this so that you guys get the basics of it, and then give some chance for question and answer along the way. Or not along the way, at the end. So let's clarify something first, because who we're talking to, and when we say passive investor, I've been in real estate for, again, almost 20 years. And throughout that tenure in real estate, I've also been in the education space, helping people learn how to branch into the industry of real estate investing. And the interesting thing about it is all along the way, we were selling this idea of passive income from real estate. And the longer I go, the more I realize that most real estate is not passive. And it always kind of shakes me up a little bit when I get a doctor or a dentist that comes to me and says, I know I need to invest in real estate. All my time's being taken up by this business, and I need to figure out a way to get money building up outside of that, so someday I can retire from it. And then we start talking about real estate, and they start talking about flipping a home. Flipping a house is not passive, guys. Trust me, I did it for many years. Flipping any sort of real estate is a very intensive process. It's going to take your time, your effort, your energy, and it can be emotionally draining at times. The ups and the downs of flipping real estate is not passive. Let's put it that way. And then we talk about investments where you are going to buy a rental or two rentals or a multifamily unit. Again, those are more passive, but they are not passive investments. Even if you get to the point where you pass off the management of it, you still have to manage your managers. And I can tell you some horror stories that I've seen over the years where somebody thought that they just wanted to be passive real estate. They bought an apartment complex, they handed the keys off to some apartment or some property manager, and then they found out the manager was living in one of the units and his brother was living in the other unit, and they just weren't getting the cash flow along the way. So there's always some attention that needs to be there when it comes to owning and managing properties. So you are going to be the operator if you're going to own real estate in that fashion. What we're talking about is true passive investing. Passive investing is where you find somebody that they're good at operations and they understand the business of their particular niche and strategy in real estate. And you invest into a company with them, and that company buys the real estate. This is what Mike Anderson did for over 40 years. He was the operator, and he built a successful company that helped others create passive income so that they could focus on the things that they loved or that they were good at. And so what we're talking about right now is something that will serve those who are a limited partner or a passive investor in a current real estate syndication who may want to sell their interest. It could also pertain to a GP sponsor. That would be the person who created the investment overall, who has excess shares that are passive that they want to sell. And the reality, guys, if you understood what I just said, I could end the webinar right now. Okay, so if you understand those three things, we've already answered all the questions, but I'm going to go through all of the rest of it so you get the additional background behind all of this. We're going to talk about the big lie and the real issue of why something like this hasn't been created. Why is there a stock market where you can buy and sell fractional shares in companies, and there is not something where you can buy and share fractional shares in companies that own real estate syndications? The syndications that were put together typically using Regulation D exemption so that it doesn't have to be a registered security. We'll talk about that. Talk about PREIshare and waking up an industry. We have some amazing folks that are becoming advocates for PREIshare because of what it can do for the industry. And we'll talk about becoming the bridge to the needs of the passive investor and to the real estate sponsor. So, can you relate to being in a position where you invested your money because you wanted to put your kids through college, and then the kids got into college and you realized that was a big bill and your money is tied up in some transaction somewhere? Have you ever been in that position where you had a dream car, that car came out that you've been waiting for, maybe you were on the list because you were a previous owner, and then all of a sudden all your money's tied up into an investment somewhere? I know that a lot of entrepreneurs, what they do is when they get money in, they deploy it as quickly as possible so that it keeps them motivated to continue to build their business. But then when those big purchases come up, they need access to liquidity on the things that they've invested in. And oftentimes, if they're invested in passive real estate, they don't have that liquidity. This is a big one right now. If the times are changing economically, do you want to get your money out now so that you're prepared for what's coming? Be it prepared for potential downfall or prepared for the opportunities that it creates. This is what we're talking about. we're seeing right now that many real estate syndications that were created over the last 3 to 5 years have been pitched as a 3 to 5 year time frame, and now they're turning into 5 to 10 year time frames very quickly, just because of the credit markets and what has happened within the world of money. So the PREIshare Listing Hub is the solution to you getting your liquidity. And here's the big lie. For all the years that people have been creating real estate syndications and using the Reg D exemptions to create 506C or 506Bs, they've been telling their investors that you are invested in real estate. And because you're invested in real estate, it is not liquid. The truth is, you're buying shares in a company, and the company is buying the real estate. So those shares can be bought and sold. So the lie is, when you invested in a real estate syndication, you weren't investing in real estate. You were investing in a company that owns real estate. And here's the truth about it. It wasn't malicious intent. This lie was not them trying to deceive you. They really just wanted to come down and make sure that they set proper expectations with those who are investing into their deals. And so if you're investing in with a syndicator, they didn't want you expecting that that money was somehow going to be returned to you from them. Because if you look at it, most syndicators start off because they're not wealthy. They start off because they don't have all of the money to go out there and do real estate transactions. And so they have to scale in order to just make a living, let alone get to that big long-term true wealth, which is the goal by the time they've done, multiple transactions or built a business like Mike did, where they had over $1 billion in assets under management. You have to scale to get to that point. So they want to know who's in their deal along the way. They don't want a lot of problem people inside of their transaction constantly causing issues for them when they want to go focus on the transaction itself and the operations of it. And they don't want to have to go backfill operating transactions that are doing what the business plan was supposed to do, when they're probably out focusing on the next deal, on the next raise, on closing on the next property. So until now, there really hasn't been somebody in the middle to align the interests of the syndicators and their passive investors. And along comes PREIshare. So we have over 100 years of combined real estate experience within our team. And 100 years is a very rough estimate, a very small number compared to the real experience, but we didn't figure, putting the exact years in there when it's going to be constantly growing really matters. And throughout the past now 2 years, we've refined our models and procedures through rigorous verification, talking to industry experts. Within our team, we have over $7.3 billion in real estate transactions. And I always caveat this because I never want somebody coming in here and saying, well, geez, Christian, you've done so much real estate. We already said that Mike Anderson was over $7 billion in real estate himself. And so that kind of gives you some of the background in what we're doing here. But many of us have been in this industry for many, many years. We have a ton of experience, and we're making waves in the industry. These are just some of the folks that are talking about what we're doing. And if you don't know these names, go look them up. Go see what they've done in the industry. See their background. See the types of transactions that they've done. And that will give you some understanding of, if people at this level of real estate syndication love what we're doing and are advocates for what we're doing, then we're probably doing something right. So here's what the Listing Hub is. For buyers, it's a place where you can purchase fractional interests of existing real estate transactions. So you can buy those based on their performance rather than pro forma. Essentially, you're buying cash flow at a discount. In fact, if you look at the PREIshare fund, which is another aspect of our business, this is our entire business model right here, is going out there and finding these fractional shares and buying them based on the discount of the cash flow. So you can buy short-term or mid-term interest investments rather than long-term investments. And for sellers, what this does is that it gives you ability to sell your fractional interests, so to liquidate those investments and free up capital, to get your interests in front of funds like ours and others that will be watching the Listing Hub, and accredited investors that are capable of buying you out. We can also help with breaching the conversation with your sponsor. So if you're a little nervous because maybe the sponsor is somebody that you know or you respect, and you don't want to go to them and say, hey, I want out of the deal, but you've got cash needs. We can help you breach that conversation and help them understand the benefit of why they would want to allow the sale so they can keep you happy and they can get a brand new investor slotted in to their current and existing transaction. So here's how you get started. You're going to start with a phone call. In fact, Julie, who we have on the line here, oftentimes is taking those phone calls, walking people through the process of adding their listing onto the Listing Hub. Once it's added on there, you're going to start to receive offers from accredited investors or better, right? So accredited investors is kind of the minimum baseline that we have for somebody to shop on the Listing Hub. And the reason why is because many of the regulations from the SEC allow the accredited investors to kind of do as they please, right? They want to protect those who may not have the savviness, but once somebody becomes an accredited investor, they feel like you're sophisticated enough to get out there and do it on your own. And then you're going to go through and make a sale. And we actually are working right now with an escrow processor that can help process those sales as well. So we're really doing everything we can to make this as seamless as possible. And because we're in beta phase, because we're still working through the process of building this tool, we are offering you a free listing. So if you want to go to PREIshare.com/free listing, you can go on right now and you can claim your listing. So maybe you have $100,000 invested in a syndication, and you know what? Maybe you don't even need that money right now, but you're thinking to yourself, man, if I could get that capital out, if I could see how much I could get for it now, I really have other things that I'd like to invest in. Guess what? We're giving you the opportunity to do so. This is the way that you can do it for free. Just go to PREIshare.com/free listing, and we can make sure that we answer all of your questions. If you have more of a generalized question, because what we find is when we're out there talking about here's how you can list your interests, we have about 4 to 1 of people who want to buy these interests than we do sell these interests. So if you have some general questions or want to learn about how to buy off of the Listing Hub, then send those to listinghub@PREIshare.com. All right. I think I ran through all of the information and I didn't miss anything major. And that was my goal here, because really, I want you guys to be able to hear from the experts in the industry. And Julie gave them a proper introduction, so I'm not going to go into a lot of detail. But Michael Anderson, we have with us here, and you guys can ask him questions. He is the CEO of PREIshare, and really the brainchild behind all of this. When he tells his story, he retired for all of about 35 minutes, I think, and realized that he didn't want to be retired because he loved the industry, but this is his opportunity to give back and solve some of the issues that he recognized along the way. We also have Kent, who has been in traditional investments, institutional investments, and has been heavily into the real estate side of things as he managed the fund alongside Michael Anderson before. And we have Arthur Bavelas. He is talking to family offices and investors all the time, people that are wanting to place capital, people that are moving capital around, and he is somebody that can truly speak to the need for this in the industry. So with that, I am going to shut my mouth, turn it back to Julie, and she's going to field the questions along the way.
Julie, can't hear you.
Just ask my team. I'm famous for this. Oh, so frustrating. First question we have is, who can list here? Who can list on the Listing Hub?
I can field that. So
let's take it, Mike.
yeah, so anybody can list on the Listing Hub. It has no pre-qualifications. Because of the nature of the SEC rules, you do have to be accredited to buy, but anyone can sell. For example, we have a lot of interest from probate attorneys, divorce attorneys, all sorts of people that ended up with fractional interest that had, were not accredited, but received it by virtue of some legal action or something like that. So all of those people are able to sell. There is no regulation preventing that. So there's no prerequisite. So if you end up owning a fractional ownership in a real estate investment, you're more than welcome to list it. No restrictions.
Perfect. Okay. Riley asked, she says, or he, Riley is for male and female. Riley, I am so sorry if I botched that. Riley asked, if I'm invested passively in a syndication and need liquidity, but I don't want to sell my entire investment, can I only sell a portion of it on the listing hub?
I'll take that one.
That's a great Kent question. Go for it, Kent.
Yes. Okay. That's pretty much it. Yes, you can do that. It'd be the same. The only thing that you need to look at is in working with the sponsor, and we have sample language that the sponsor would need to adopt for the operating agreement to allow for this. Many sponsors use pretty much the same template that's used throughout the industry for putting together these deals, these passive interest deals. And unfortunately, the default language, as Christian was talking about earlier, defaults to not being able to do something like this. And so they can use the sample language that we have, and you'd get a hold of somebody at PREIshare if you need help working with sponsor to get that done. But whether or not you want to sell a portion or all your passive investment, either way, doesn't make any difference. The only thing that needs to happen is just make sure the sponsor can adopt the change in the language there.
And I may caveat that a little bit with the famous real estate answer, which is it depends, right? Because it will depend on the structure of your transaction. And if they have a minimum amounts that you can own or sale, that could restrict it. But as far as us as the listing hub, as Kent said, we don't care if you sell portions or if you sell all of the investment you have with any particular sponsor.
Yeah,
And I'll add,
it's subject to sponsor approval, right? So, but that's the case anyway. They've got to approve anybody buying because they're required to do so by the SEC to prove up their accreditation. But a fractional share would also fall into that approval process, I would think.
and the sponsors, you know, even though it's one more person in the deal, sponsors these days are happy to get new investors. There's a lot of competition among sponsors for new investors. They're happy to get a new investor.
Yeah, I've heard Mike mention several times that it costs an average of how much to get a new investor? It's like thousands of dollars, right?
Yeah, when we first started, it was about $4,800. Now it's down. Well, during the crowdfunding era, when that was really going, we dropped down, thanks to Kent's help. Our cost of acquisition for a new investor dropped right around to right around $2,200. So less than half.
About giving them a free new investor. Sure.
Yeah, it takes a while to develop a relationship with a new investor just because they have to get a comfort level with you as a sponsor. But when they elect into your investment, you forego all of that process of getting acquainted, which is really quite nice.
Yeah, and that's even on the small scale. If they end up getting a fund or a family office that invests in, and this is something Arthur may be able to speak to, there's a lot of work that goes into building a relationship and a lot of due diligence usually that goes behind that. So if you get a fund or a family office that steps in and invests and buys out a fractional share, that's a great connection to that relationship. And I don't know how much it would cost to build that otherwise.
Perfect. All right. Ross is asking, do you guys accept all asset classes? So I guess a question to cover is, what types of interest can I list? What can be listed?
So as long as it's real estate asset classes that he's mentioning, real estate is the key.
Yeah, it has to be a fractional ownership and passive. Outside of that, we'll take any, it's all real and a real estate asset.
Okay.
So those are the fundamentals.
Any passive interests in all real estate asset types. Yes. Okay.
Correct.
Okay. All right. We don't have any other. Oh, here we go. Camille asks, what about shares?
This, I'm guessing this is regarding a REIT or something like that.
I'm not sure. Camille, if you can't, yes.
Okay. Mike, you want to take that one?
Yeah, I can. The intention is yes, we will. We've got some more legal hurdles that we've got to cross before we can start taking private REIT interest into the listing hub. But that will be probably first quarter of next year, I think, when we were able to do that. So just stay tuned, because that's such a big part of the market, and that really is someplace where they need a lot of liquidity.
She says she has a ton, so we ought to get
Have a
back to her on that.
Well,
Beautiful.
how about we'll get back to you? So
Yes.
Yeah, Camille, set up a call with us. I'd love to chat with you about what you've got going on, and that could potentially help us expedite the process.
I've got to tell you, I'm in the same boat. When I sold my company, I ended up with a ton of private REIT shares because they converted all of my assets into a REIT. So, and that has even worse liquidity factors, private REITs do. And so we knew all along that we were going to have to provide liquidity to that segment. So yes, it's important to you. It's important to me.
All right, got a question here. How much can I sell my listing for? I love it when this one is asked, because Christian's got a good long answer for us on this.
Well, the answer really is whatever you choose. That's the short answer of it. You can sell it for whatever you choose and whatever you can get, I guess, is the other side of that. And so to add some context to that, if you have a really well-performing transaction and there's been a lot of value added to the amount of shares that you have, then you should be able to capitalize on some of that value at the very least, if not all of it, by selling it in the open marketplace. And on the other side of that, if you're listing your share and you have kind of more of an immediate need, you may want to step down and take less of your upside so that you can get the money faster. So it's just like real estate. You want faster, you want the higher price. Those are the kind of two factors that you look at there. And then if it's not performing well and you're kind of frustrated with it, then you really may want to think about discounting so that you can just move on to something that's going to provide you better returns overall.
Great. Okay, we've got two questions that came in, and I think we've kind of covered this, but I think we can cover it. We can kill two birds with one stone here. So one is, what do I need from my sponsor if I want to do this? And number two is, are sponsors interested in the idea, which we kind of covered. But let's talk about why sponsors get behind this, why they love this. Why we're literally working, Christian and I, with sponsors to send out information to their investors saying, I endorse this, please use this service. So let's talk about what this does for the sponsor.
I could answer that as a retired sponsor of 42 years. When we were doing our raises, we would, thanks to Kent, we were very, very successful. We're always in the top 10% performance-wise in our industry. And because of that, we got a lot of referrals. So that would mean for us, what we found is that now these were people that were excited about doing business with, called us to be an investor, walked them through the process. And statistically, out of every 10 investors that would come to us wanting to invest, 7 would say no the moment you said, and it's not liquid. We need your money locked up for 5 to 10 years. That's a death knell, because no one really has got a crystal ball that says, I don't need my money for 5 to 10 years. So that's the number one reason that sponsors love it, because they have a higher level of interest in their syndicated real estate offerings when they go out and present them to the investor public. So that's the number one reason. And the second thing is I think it's a goodwill factor. For me, it was always, you never could say no to somebody who says, do you remember when I told you that I would invested for my kid's college fund? Well, guess what? My kid got in college. I need my money. And I said, you can't then turn around and say, yeah, do you remember that part I told you I was going to lock your money up for 5 years? That's not right. You knew exactly why they invested. So it behooves you then to go out and raise the money and buy them out, or write a check out of your own operating account. Both are counterproductive for sponsors. So those are the primary factors that immediately come to mind. There's more, but those are the primary ones.
I would add one more big one too that I think is a kind of an important one these days with higher interest rates. If you can get equity cheaper, that's a big value to sponsors to be able to get a deal done if they still find a deal that they want to get done these days. And when you've got investments that all of a sudden now have an exit door, have a secondary market, that's Jeanette. That just turned me off.
Oh, you're still on, Kent. We
Oh,
just can hear you, but
oh,
your video froze. So keep
my, sorry
talking.
about that. Somebody just turned off the power here.
Oh, no.
Okay, so what I was saying is if the cost of equity goes down because of that, because your investors suddenly they have an exit door, their return requirements are going to be less. And so if the return requirements go down, of course, then for those investors, they get cheaper equity for that sponsor. That becomes a big attractive thing, especially in today's day and market with higher interest rates. So getting cheaper equity is a big deal.
Yeah, but the trade-off for that is when you say you get a lower cost of equity, that means that those investors are getting a lower cash on cash return. And this is a question for Arthur I'd like to ask because he's one of the brightest investment guys I know. What's the value of being able to recapture gain and reinvest it versus a lower well, of course, one thing that's happening is if you're using more equity, you're de-risking the property, right? Because number one risk in real estate investment is debt, especially these days. So that's commensurate with the lower risk involved with using more equity. But the other thing is if you add liquidity to it and the ability to recapture gains, what's that worth to you as an investor? You know, and Arthur, you and I have talked about that, and I think you've got a keen knowledge of that.
Yeah, it's actually germane to the question that was asked. What is it that you can do as a passive investor, as a LP in a general partnership in a real estate asset class to increase the overall performance or enhance it? And I'm going to pause the answer to that question by asking a question that has happened to me regularly in the context of PREIshare, in that people were asking me, well, wait a minute, why did it take so long for somebody to do this? It seems obvious that there should be a secondary market for limited partnership interests that are illiquid in real estate. And the viewpoint is largely as a result of, I can name 6 firms that are privately held in New York City that made their fortunes on secondary market or non-liquid investments in private enterprises. And so people were making money and finding ways to monetize illiquid positions in private companies for the last 15 years. And so why wouldn't that translate into essentially the largest asset class that is held by passive investors, family offices, people who just invest in real estate? So if you put into the mix, as Michael has suggested, a good sponsor, which is really the answer to the question about how do you invest in real estate as a LP, you really have to find a good sponsor, because there's dozens and dozens that have made money and they're just average at best. But if you throw in the liquidity as by the way, this is a 7-year term, there's no liquidity, but over here we plug this thing in, and if you want to monetize it before the term of the GP suggests in the operating agreement, then there's a place for you to do that. And it's all a function of, bid and ask, but liquidity oftentimes is king. So I don't know if I answered your question, Michael, but I think that aside from any tax issues that you might benefit from, lost carry forwards, that sort of thing, offsetting other ordinary income, not giving tax advice here loud and clear, but having that liquidity as an option is a further enhancement to being an LP investor in what otherwise would be a illiquid investment. Does that help?
Yeah, the thought process that I had, and you and I have discussed in the past, that real estate by its very nature has a tendency to deleverage itself over time. And what that really says, you say, well, that's great, I have all this build up equity, but this returns remain relatively the same, but the more equity you have, the lower percentage return on the cash, even though some of that money you have never met before, you know, you didn't originally invest it, the market gave it to you, or you got it through paying down the existing debt, but it starts losing its rate of return over time. And when you can recapture that on your own schedule and then reinvest that additional equity plus the equity you had in and put it to work at a higher leverage, you know, as long as you're getting positive leverage in the capital stack, you know, your money grows compoundingly faster.
Yeah, no doubt, at an exponential rate. And
Yeah.
furthermore, and Kent does a good job of describing this, when you invest as an LP in a GP structure for real estate, it takes time for fees, charges, stabilization to produce a cash on cash and then an ultimate equity return. And I like to compare it to, I don't know if people are familiar with buying life settlements and life insurance. So the early investors in the life insurance policy paid all the fees and charges. And if you can buy it, you know, 3 years in or 4 years in, they paid all the hard stuff. And now it's just, you know, a much better asset to buy. And that's true. Of course, everything's subject to price in an LP interest in a real estate fund. So a lot of the fees and charges have burned off, and now it's stabilized, and you actually have a better asset to buy from the buyer's perspective. I know we're talking about the listing hub, but from the buyer's perspective, you arguably have a stabilized asset to buy that if you were the investor at the beginning as an LP in a fund, you've got to wait all that time before it's stabilized.
Yeah.
You know, another thing is interesting to look at is the typical timeline that you would see on a say a value add type deal. When Mike and I started doing syndicated deals back in about 2002, cap rates were pretty high at that point, and we didn't have to do value add deals to get a deal to work, because we were acquiring some deals with cap rates 11% cap rate, and then a few years later we'd sell it for 7 or 8% and count a big gain. Now cap rates are so much lower than that, and so there's not much upside that you can get because cap rates are so low, unless you can prove the other side of the equation, that is the NOI, through a value add play. The problem is with value add is they take a bit of time to do. So if you get a sponsor that gives you a value add deal and it looks great on paper, and they say, oh, we're gonna do it for 5 years, and they come in and they maybe as a multifamily property, they come in and redo all the kitchens or whatever it is they're doing on the value add play for that property, and then they're done with that maybe 2 years into it, and so they've now significantly enhanced the value of the property. And meanwhile, they probably have pretty good cash flow going on that property. And they want to continue to hold that property, maybe even longer than the 5 years. And the investors looking at that and say, well, I'd like to capture some of that game, like what Mike was talking about. I think you coined the term on that, Mike, dynamic releveraging, which is what you were talking about. And that's the way you distinguish yourself between a real estate collector and a real estate investor. People that understand where you make the real gain in real estate is by capturing that game, reinvesting the larger amount now that becomes equity in a new project. And all of a sudden you're double dipping, triple dipping, quadruple dipping as you continue to do that, because you've got more and more projects that you can buy that way. Right. And then you become a real estate investor when you do that. Well, the way that happens is like Mike was talking about, is through the movement of money. And sometimes that's not exactly what a sponsor may want to do. So this is a way to line the interests of the sponsor with their investors. Sponsors opening up that gate to allow the sponsors, or the investors, to do that kind of work. so they can capture that gain earlier and move on and get another deal.
Yeah,
that's
Michael,
exactly right, Kent. I mean, if you're, yeah, see, that's where one of the places I hated as a sponsor. Optimum cycle for the sponsor is 5 to 10 years. You know, a lot of it was market cycle driven and so forth, but optimum for them was 5 to 10 years because they have different profit centers. A lot of them self-managed or receive management fees, and there's asset management fees. So that's their optimum hold cycle. As an investor, your optimum hold cycle, especially when you've got a value add or anything else, is when anytime there's a massive shift in income, or a gain through paying down the debt, your optimum period is 2 to 3 years. That's not an alignment of interest, you know, and the sponsors got you locked in. That's why this is so critically important.
And it
yeah,
becomes very attractive for another potential buyer coming in on the listing hub to buy something like that, because they've got something now that's got a lot of upside that they can share in by buying it midstream, and it's got a good track record.
Yep. They're buying performa, or I mean, buying performance, not performa.
Yeah, they're buying actual numbers because it's got a track record as opposed to the performer when the investor originally bought it.
yeah. I think one of the simplest ways to look at what we were talking about, Michael, and in the context of this is what typically happens, and you know this better than me, but you know, you buy a property, it increases in value, you have a note on it, you recapitalize it, you have the same amount of equity that you had when you started, but now you have cash to go buy the next property.
Right.
And
that's the best way to do it. But right now it's not really an option.
right. But what the listing hub does is allow people who wouldn't otherwise have that option anyway, like they're not calling the shots on recapitalization and they're not benefiting from the spoils of that, but they could in a fashion recapitalize by liquidating part of their LP interest and taking money off the table and doing something else. So it's the same idea, right?
Right. At least gives them that control.
Yeah.
I always felt as a syndicator, the first option you wanted is a refinance to recapture equity. You still got the asset, still got the cash flow. Cash flow would have gone down a little bit because you've got additional debt service. And it depends on what the delta was between what you refinanced at and what the new financing fit into the capital stack. But then you take that cash and go out and reinvest it in something else. That's that compounding growth thing that Kent was talking about. Next best, if you don't have that as an option, but still needs to be done, is that when you get a certain percentage of equity buildup, the best thing to do if you can't refinance it, which you don't have that option as an LP, is to sell it. And up until now, you didn't have that option.
Yeah, listen, it almost to a person, and the history of this is a friend of mine introduced me to Michael, and I did the same thing that a lot of other people did and said, wait a minute, nobody's doing this? Like there could be somebody doing this and I not know it, right? And so, you know, it like you can actually do this, Michael. So, you know, which is why I'm involved, right? Because I think there's a huge opportunity. But to a person, when people say, wait a minute, I can sell part of all of my LP interest and take some money off the table, like I can do with my other asset classes. And the asset class is so huge that, you know, I think it's worth mentioning that in the world that is family offices, I see it bifurcated pretty distinctly. There are people who invest directly in real estate and they have two asset classes. They have real estate, they have cash. And then the other part is they have passive investments through sponsors and funds. You know, it's pretty bifurcated, right? So there are people that are inching into the, you know, real estate and cash by doing syndications and that sort of thing. But if you're not in a position to, you know, be the principal buyer of an asset, then then you have to be arguably in the asset class. So you're going to acquiesce and you're going to participate as an LP in a fund. So there's a massive amount of people that have that interest through LP interest. It's just huge.
So how important is that going to be, do you think, to family offices? Would there be more participation if there was that liquidity element to family offices?
So prognosticating, but I think with some merit, is there's no question that having liquidity is of paramount interest to family offices. There are many of them that are just buying assets themselves and they're not LP investors and funds, so it's of no interest to them. But there are huge amounts of people that have made their fortunes in a tool and die business and aggregated it and sold it to a private equity company, and they have to be in the asset class, right? And so they bought LP interests, and now they have an opportunity to go into some other business or buy another or roll up a machine shop or series of them. And so their assets are better deployed in something that they know how to do. So they're going to liquidate part of that. And if there's no liquidation available, then they have to, borrow money or do whatever else they're going to do. So I'd say it's super important. It wasn't a very good example of, machine shop, but, family offices tend to invest in things where they've made their fortune, unless it's the third or fourth generation. And then they're just moving, doing asset allocation around.
So out of your real estate group, well,
Yeah.
how important would that be to them?
Huge. Yeah. No doubt.
Hey, let me chime in here. We've got a question from Riley, and I want to make sure that he or she is not forgetting. Now I did it. We want to make sure Riley is not forgotten. And they said, question for Sir Arthur: what strategies or measures do you have in place to enhance the overall performance and value of the real estate assets within the syndication, thereby maximizing returns for passive investors?
Yeah, I failed at answering that well. I think the answer to that question is the sponsor. Yeah. As an LP, you virtually have no control over any of that. Except, and listen, this serves our purposes in me saying this, that invest with a sponsor that has a deal with PREIshare. So if you need to liquidate and get out, you can.
Well, and we also vet the sponsors.
Yeah.
We have a group of approved sponsors that we vet very closely. Doesn't guarantee that you've got a sponsor that's going to always be successful, but they have a proven track record of success. That's critical. You're right, Arthur. It is. They're totally in the driver's seat.
Totally. Yeah, I liken it to the, and I've done a number of these special purpose vehicles, which is essentially the same thing, where you rally a bunch of investors as participants in an investment of a private company, and the manager of the special purpose, the SPV vehicle, is the one that calls all the shots. And so you have to have confidence that manager is going to have an alignment of interest with the LPs. So it's a good question, Riley. And I hate when people say it's a good question. Did I just say that? People always say it's a good question, even if it's not a good question. But it happens to be. You're at the mercy of the sponsor in regard to all of that, except.
What's a great question is it's a fundamental question.
Yeah.
It gets just down to the fundamentals.
Yeah.
Well, one of the things that PREIshare has done to help with that question there is to create a standard for sponsors, the definition of what that is, a good sponsor in terms of being responsible to their investors.
Yeah.
And being able to deliver on the returns, being investor responsive in terms of their communication, their distributions, even getting K1s out on time. And so, if you go on our website, you'll see more information on that. But the PREIshare qualified sponsor has been vetted to meet those standards. There doesn't mean that they're still not going to have a deal that's going to go south, but it does mean that they have a pretty good track record. They don't have any criminal background history. They have a history of being responsive to those investors.
Well, and I'll add in here, Riley, because that question is more based around for an operator or somebody that is doing it. We have a lot of great content with sponsors that we've interviewed that give different ideas of things that they utilize within their business to maximize those returns. So that'd be a great place to go. But also, I recently read the book by Sam Zell, and if you don't know who Sam Zell is, he's probably the biggest real estate investor America has ever seen. And he talked about the fact that liquidity equals value. He says that multiple times in his book. And so it sounds a little bit like it's self-serving answer, but the fact that if you have liquidity, that enhances the overall value simply from that aspect alone.
Well,
to be fair, we probably ought to look at one other thing too, because we've had questions that relate to what's in the best interest of the sponsor. We talked a little bit about that. Mike talked about how it gives them a lot more investors that they potentially would have. But what's the downside for the sponsors? And in talking to sponsors, we've talked to a lot of sponsors about this. There's only been one that came forward with one concern they had, and it really isn't a valid concern. The concern is now you've created a secondary market for these investments. If you all of a sudden have a number of people selling these investments, does that create a depressive effect on the value of that investment? And the answer is no, it would not. Because going through the listing hub it's not a public transaction. So it's not like selling something out on the stock exchange where there's a whole bunch of sellers and it's going to bring down the stock price. That's not the case here. It's a private transaction. And so that wouldn't happen for that sponsor. And as long as the sponsor's done a great job with their investment anyway, the underlying investment should perform well, regardless of any activity on the listing hub, the people buying and selling that investment. It should do according to whatever they originally planned and how the sponsor's managing it, exactly like Arthur was talking about. But that's the only thing I've heard since we started doing this from any sponsor. And in my opinion, it wasn't a real concern because of those reasons.
I think that was a fear-based concern, that they're worried about their value being pegged by somebody selling a secondary interest in their GP to demonstrate that maybe they're not doing their job. That's a fear-based.
It was exactly it, Arthur, fear of exposure.
Yep.
And that was an early concern, as Kent pointed out. It never materialized. So we never saw it happen, and it hasn't come up as an issue since.
Beautiful. Thank you for answering all those questions.
Any final thoughts you gentlemen want to share before we end this for the crowd?
I would think you're kind of through with us yammering on.
It's been a great night.
Yeah, I just want to thank you for having me. Super glad to be here, guys.
Arthur, it's been great as always.
One thing I would suggest to those who are attending here, this is a new deal to have this secondary market out there, and for it to have success. Communication, letting others know, if you're part of an investment group somewhere, get the word out. The more buyers we get to this place, the more sellers there will be, and vice versa, and the better it will be. As Christian was talking about with the Sam Zell, that's important. That we need to, in order to fix the problem that's been in syndicated deals, we need to have liquidity, and it's good for the sponsors, it's good for their investors. So get the word out and introduce others that you may know that are doing this into this, and we'd appreciate all that you can do to help out with that.
Thank you, Kent. Great point. Yep.
And I will mention too, just one last thing. If you're going to claim your free listing, go do it now while it's free. And the fund the PREIshare fund, which we haven't talked much about today, we have capital ready to buy these fractional shares. So if you have a fractional share right now that is cash flowing, but you have a financial need for one reason or another, get it on the listing hub and let's see if we can get you an offer and get you that liquidity you need.
Fantastic. Thank you. If you are a sponsor, if you have any more questions, if you want to talk to us about Listing Hub, go to PREIshare.com/free listing. Just make an appointment and we'll direct you wherever you need to go and get you taken care of. You can also join our Facebook group of investors and sponsors for some great conversation and content. And if there's no last second questions coming through or any other comments from the gentleman here, I think we successfully made it through.
Thanks for joining us, everybody.
Thank
Hey,
you.
thanks for doing this,
Thank you, guys.
Have a good night.